Hello traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, April 25th, 2018, and this is the Daily Report for Gold and Silver. Any upside moves in the precious metals markets and potential key pivot point was put to rest today with the precious metals complex once again trading under pressure. Gold closing $8.60 lower, $13.2440. Silver off by 17 cents at $16.52. About the only precious metal to come in unscathed today was palladium, which closed up 65 cents at $9.71. We will look at a couple of charts when we pull up our technical studies. Now, that was primarily due to dollar strength, 91.03, up 49 points. Dow fractionally higher, 24.83. And Bitcoin giving up some of the profits that it's made recently, closing down by $370 at 90.90 and 91.10 in the CME and CBOE futures exchanges. Traders, any hope that yesterday's uptick signals some potential support and a reversal in the market was short-lived at best? Gold returned to its downward inclinations today, currently trading off by $9.40 at $13.2360. Yesterday, we identified the potential of a pivot or reversal point with a simple candlestick pattern called a bullish harami. Simply put, it is an inside trading day and requires a confirming candle, which would necessitate that today's move would have had to see a green candle with a higher high and a higher low. Now we are faced with key areas in which, if we have continued pressure in gold, they should provide, at least on a technical basis, an area in which we could see support come into the market. We've spoken about that. First of all, we have a 78% retracement level, this being of a short data set at 1318, and that also corresponds to the 38% retracement area of a much longer data set. We call that a Fibonacci harmonics. The fact that we have two different time cycles giving us the same results tells us that that particular price point or area could in fact be significant. We then have major support coming into the market at around 1300. That is a 50% retracement of our long data set. Remember, our data set goes from 1238 up to 1369, in other words, the entire range that we have seen gold move from the end of last year to the highs achieved this year. Our shorter data set goes from 1303 up to that same price point at 1369. And the fact of the matter is we have a 50% retracement at 1304, and that also corresponds to a significant bottom at 1303 that occurred at the beginning of March. Therefore, let's see if we find any support come into the market at this particular area, the 78% retracement, although I believe that there's a high potential, if we see any kind of challenge of these lows right in here, that we will have a further erosion in terms of gold pricing, possibly taking us as low as 1300. Therefore, traders, we will remain on the sideline and remain to have a neutral to bearish demeanor on gold pricing. Silver also giving back all of the gains of yesterday and then some, trading over a full percentage point lower, giving up about 18 cents at 1652. Along with gold, I believe we could see continued downside pressure. We have a couple of different areas that we want to look at. First, if you look at this low that comes in roughly at 1635 and then carry it over, we can see that that low occurs at a 0.618% retracement of an extremely long data set beginning at 1515 and culminating at $18.38. And so for that reason, that would be our first level that we would look at, with really major support coming in at around, call it 1620, and that is the 23% retracement of this shorter data set from 1560 up till these highs at 1838. And traders, as we have talked about over the last couple of weeks, a recent precious metals weakness has been predominantly influenced by a strengthening U.S. dollar. We talked about the fact that the dollar had been in a compression triangle of sorts with our support line here and our resistance line here drawn from a series of tops. We had a defined breakout that occurred just last week. And now we have resistance, or our intraday high, that happened to come in at 9,100. And we can see that that matches up perfectly to these lows that came in 2017. So 9,100 becomes minor resistance for current dollar pricing, with major resistance, I believe, not really coming in till about 91.56, and that corresponds to a 50% Fibonacci retracement. Really interesting action with palladium today. Of course, palladium under some pretty strong pressure, retracing really from this dynamic rally that occurred over a 2-week period starting at the first week of April. It concluded when palladium prices got as high as 1,047. And what is interesting to me is the retracement currently as it resides hit a low today that matches up quite perfectly with a 0.618% retracement at $951. Also, the way the market hit these lows and then actually recovered, we know that the recovery happened late in the session because we have a green candle. Even though it's a very small green, it does indicate that the market opened below its closing price today. Therefore, I believe that we could see palladium futures return to an upward trajectory with major support at $950, minor resistance at $969, and major resistance at about 1,000 to 1,011 in terms of where I think we will see that metal go in the short term. And traders, lastly, a look at Bitcoin futures trading down $360 today at $9,110. If you recall from yesterday's commentary, we noted the fact that it hit our target, which was roughly 91 to 9,200 per coin. It is a 23% retracement. We also noted that we had an effective and strong close above that particular price point. And my suggestion was we could see 9,100 become an area of support rather than an area of resistance. It was a little bit too early to make that statement because today, after trading to a higher high, selling pressure took pricing lower, indicating the potential for a round of profit taking to enter the market. If that is the case, we could see Bitcoin futures go as low as about 8,500 or 8,100 before returning to its next cycle of higher prices. Traders, we were looking at some sort of potential yesterday that we would see some support come into the precious metals market, specifically in gold. That obviously did not occur today. On today's show, I talked about a couple of critical areas we want to watch for if selling pressure continues. What I am excited about is palladium, because the low that it hit on an intraday basis today was exactly a 0.618% retracement, and the way it came off of those lows to close slightly higher on the day, even in light of dollar strength, to me was impressive. We'll want to take a look at that and possibly put a position on from the long side. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.